Hi there traders, this is Steve Miley for forextraders.com, and we're now going to take a look at the US dollar versus Canadian dollar and US dollar Japanese yen. Slightly differing tones in here. Generally, broader US dollar weakness is still pervading across markets. However, in the short term, we have seen for most currency pairs the US dollar rebounding from the earlier part of this week. But generally, US dollar weakness, and that US dollar weakness we see here on dollar CAD, primarily driven from the mid to early part of June by a more dovish Fed. So a more dovish Fed has seen the US dollar weakening, but more recently we have seen a bit of a correction to that, but we'll talk about that a little bit more in a second. For dollar CAD, however, in here we had the plunge post Fed, previously already selling off because of a more dovish expectation from the Fed. Also then the plunge after the Fed, that's this big move here, and that's wiped out multiple supports in here previously in June, and then since mid-June taken out here, and then supports over here. And then we're had the acceleration lower again, also being helped, remember, by the strength in oil. So the strength in oil again pushing to new highs in here, helping the Canadian dollar, which then pushes dollar CAD lower. So stronger oil equals stronger Canadian dollar equals weaker US dollar Canadian dollar. So all of that is now pushing markets lower. So all of that pushing dollar CAD lower, and that leaves the risk very much lower. Even we've had a very tiny bounce, but risk still lower. Dollar yen slightly different. So the dollar has rebounded this week. Basically, we've had Fed speakers in here talking down the rate cuts. So basically saying the market getting very aggressive on rate cuts. Even talk of previously last week of a 50 basis point cut. Well, now the Fed trying to rein the market back in here. So that's tempered some of this. So the dollar has seen slight rebounds against some currencies in here this week, and has certainly stopped its slide lower that we've had. So we've seen dollar yen rebounding on the back of that. Dollar yen back higher, it's forming a small base. Now, intermediate term, this bear trend is still intact, particularly whilst below this our level here, or our area at 108.72 to 108.80. But in the very short term, the risk is higher, but intermediate term for dollar yen, the threat's still lower. So, but still look for maybe a potential pushback higher in here. Remember as well, we've got G20 looming, so we'll see what we get from that. Rumours that there's going to be a truce between US and China. So we'll see where we go with that though. So this has been Steve Miley again for forextraders.com, and I'm going to wish you all a great trading day.